How to use State Farm Life Insurance as a properly beginner. Mistakes that cost you. State Farm Life Insurance can provide financial security for your family, but many policyholders make mistakes that reduce its effectiveness or cost them money. The surprising truth is that owning a policy isn't enough. You need to know how to use it correctly. A common mistake is choosing the wrong type of coverage. Term life insurance is affordable, but only provides protection for a set period, while whole life offers lifelong coverage and cash value growth. Selecting the wrong type for your needs can leave gaps in protection or unnecessary costs. Another error is underestimating coverage amounts. Many people purchase policies that don't fully cover debts, mortgage, and future living expenses. Calculate your family's financial needs carefully, factoring in mortgage, tuition, and other long-term obligations. Failing to update beneficiaries is another trap. Life changes such as marriage, divorce, or the birth of children can affect who should receive your benefits. Not updating your beneficiary can cause confusion or legal complications during a claim. Neglecting premium reviews is also common. Life changes and policy performance can make adjustments necessary. Some State Farm policies allow additional coverage or riders that protect against critical illness or disability. Ignoring these options can limit your protection. Finally, misunderstanding the claims and cash value process can cost you. Keep your policy documents accessible and understand how loans or withdrawals from the policy work to avoid unexpected tax consequences or reduce death benefits. By avoiding these mistakes, you can maximize the benefits of State Farm Life Insurance ASA. Choose the right coverage type, maintain sufficient protection, update beneficiaries, review premiums, and understand your policy's features. Doing so ensures your family is truly protected when it matters most.